Steve Stanley, what matters right now within that equation?
Well, I think consumption has really been the star of the show, and that's what we're looking at. I mean, consumer has held up much better than I think most people expected through the pandemic, and now with renewed restrictions and kind of cuts in mobility a little bit, I think there's obviously some concern about whether the consumer can continue to get back toward normal over the next couple of months.
Give us a calendar of the need for income substitution. Benefits, I guess, 1231 disappear for many, but how urgent for you is income replacement right now?
Yeah, I think we're in a different place than we were in the spring. I mean, in the spring we put forward the $600 a month unemployment benefits as well as a round of rebate checks for everyone. And I think at this point, the whatever income replacement we do probably needs to be more targeted. So I think the idea of continuing the unemployment benefits, certainly, continuing them beyond mid-year or the end of the year, but also maybe putting forward another bonus. It doesn't necessarily have to be $600, but perhaps $300 or $400 or whatever. Makes a lot of sense because there's still plenty of people who basically can't work because of the pandemic. I'm not sure that we need across the board help the way that we got in the spring. So that, to me, that's the key distinction.
And Stephen, this is a really important nuance because right now we're looking at American consumer finances that are the best shape in decades. People took these checks, they paid down their debt, they don't have anywhere to go to spend money, and so you're seeing really, really good balance sheets, but that's an aggregate. What is the long-term economic consequence of the lower tier of workers who are seeing their jobs get cut at a faster pace and who don't have the same kind of cushion even after the round of stimulus?
Yeah, well, I mean, obviously those are the sorts of people that have to live paycheck to paycheck. So the loss of a paycheck means a lot more for someone in that financial situation than it would for, someone that has a nest egg. And I think, again, that's why there is, in my view, there is urgency to make sure that we're providing ample support to that group of people, the people who are unable to work and need the money right away. I think, maybe the urgency for the rest of the population isn't as great. I mean, we certainly made up over half of the jobs that were lost during the lockdown. So there are a lot of folks who were out of work in the spring who are back, but there's still plenty who are not. And I think, those are the folks that we want to try to take care of, and especially now that we have a sense that perhaps it's only a few more months. Maybe the vaccines are broadly distributed by the spring, and things can get back to something much closer to normal at that point. So if I'm a lawmaker at this point, it makes it easier, I would think, to say, okay, well, we can support people for 3 or 4 more months, but it's not an indefinite thing anymore.
Stephen, let's talk about the economic data. Tom mentioned the Asian currencies doing tremendously well recently. The data out of China, fantastic, decent again this morning. I don't think it's ever too early to talk about payrolls for this month when it comes out in early December. Stephen, what are you comfortable forecasting at this point, given the direction of travel with economic restrictions coming up across America?
Yeah, I would say most likely that we're going to see another deceleration, and this one could be more significant than what we've seen over the last couple of months. The pace of growth was fairly steady over the last 2 or 3 months, I would say, certainly in the private numbers. You're probably going to see a slowdown, obviously, with the virus having picked up. But I would say, we've seen a flurry of new restrictions put in place over the last week or so. And so my guess is, last week was the payroll survey week, so my guess is that whatever slowdown you're going to see in the pace of job growth over the next several months is more likely to be clear in December than in November. I think we'll get some slowdown perhaps for November, but then maybe a more significant one on the back of some of these virus restrictions in December.
Let's add to this then, Stephen, and think about the fact that this economy has had the stress test, a severe one, back in spring. Can you model what it might look like when you get the same stress test again? You have it once, you get it a second time, and how corporations and individuals might respond, maybe differently?
Yeah, I think the one thing is that people have kind of gotten used to the new reality. So if you think about, for example, manufacturers, they closed their plants for almost 2 months, and then when they came back, they had to retool their operations to provide for a more socially distant workplace. And having done that, I think it makes it far easier now because they've already kind of adjusted. So really, I think the bulk of the adjustment that needs to be made now is just kind of dialing up and back the degree to which people are getting out and about, the mobility and the level of contact that people are having. And so that does affect restaurants and high-contact industries like that. But I think the bulk of the economy, the rest of the economy, hopefully has already made the necessary adjustments and won't be disrupted too badly in the current situation.
Steve, is the stock market linked to your world?
I think I would look at it as a gauge of sentiment. And I think, clearly at this point, it seems to me that the stock market is looking through, or investors are looking through the current bad news and into, the prospect of an effective vaccine at some point next year, and then getting back to something closer to normal over the course of 2021. I mean, that doesn't do anything for us today in terms of the number of cases and hospitalizations and deaths, but it certainly suggests that people are hopeful that things will get back to something closer to normal as we move into 2021.